A sea of red on Wall Street. U.S. stocks plunging Monday as investors flee the markets in favor of safer assets amid global growth worries. Will the selling continue, or are markets set for a rebound? Nick Colas is the Chief Investment Strategist at ConvergeX, and Kevin Kelly is the Chief Investment Officer at Recon Capital Partners. And guys, welcome back. Thanks for joining us.
Thank you.
So Nick, let me start with you. Your reaction to the declines we're seeing. I mean, the Dow was down over 1,000 points at the open. Now, back in September 2008, it was down just 777 points at the height of the economic crisis. So what's your take on what we're seeing?
Yeah, we have solidly left fundamentals behind, and we are deep into the world of emotion and fear. And that's what you're seeing in this follow-through sale between Friday and today. This is no longer about China or oil or anything else. This is just raw fear filtering into the markets.
All right, and Kevin, where are you putting money to work right now? What are you telling clients?
So we're starting to be choosy, right? This is healthy for us, actually, because earnings were really kind of shaky before this, and people were trying to figure out where the last bastion of growth was going to be. Was quantitative easing going to come through in Europe? Was China going to keep sustaining their 7% GDP growth? Now we have the answers to that, so people can go back into names they know and like. Healthcare is a great sector where they can be defensive, or if they are looking to pick and choose for the long term, they can go into names like PayPal, recently spun off from eBay, has zero debt, tons of cash on the balance sheet, growing in emerging markets, and they are the leader in their space.
And other defensive names and sectors you like?
Another name actually that just came out this morning was Southern. So they're a utility name. They actually went out there. They're doing another acquisition this morning in the natural gas space. So you're starting to see big, stable companies with great balance sheets going out there and acquiring, and this is the time to do that.
All right, Nick, what are you telling clients? Where are you putting money to work?
Yeah, well, on our morning call this morning on our desk, we focused on names that have been leadership names and then have pulled back in. Technology, financials, big cap banks look to be an area to get very interested in. And in addition to that, more than anything, you do not want to panic out of positions. It's just as risky to panic out of something as it is to pick the wrong thing to go back into. So above all, be calm.
All right, and Kevin, we're seeing a ton of stocks in bear market territory, over 20% decline from their highs, like Caterpillar, General Motors. We also saw GE down about 5% this morning. Are these stocks a buy now amid the declines?
There's a lot of companies that are presenting great opportunities if investors feel comfortable with them. So Apple's one, they've got 30%. Is about cash on their balance sheets right now, but it's overseas, so they can't really deploy that. But they're still going to do buybacks, dividends. Disney is another name. So there's been capitulation events in those. So once we see the market stabilize, those can be good over the long term because they have grown their earnings. They do have solid balance sheets. So there's names like GE as well. They're starting to do some shedding and some core businesses and getting into areas that they like better.
All right, and Nick, what does the rest of the week look like?
It's going to be a very, very volatile week. We're going to see a snapback rally at some point, and people will say it's over, but we're going to see this volatility now for the next couple of weeks, at least until the Fed meeting in the middle of September, or some clarification from the Fed about where they're going. In the meantime, I'd focus on turns in oil, turns in gold, turns in the 10-year yield to give us a sense of when this market may have finally bottomed out.
Are you telling clients to move into gold, some of the safer haven assets?
No, we're telling them to watch those as indicators. Most of our clients are equity related and equity driven, mostly here in the US, but they're looking for signs in other markets that the market has bottomed in stocks. So I'm telling them, watch the 10-year, watch oil, and watch gold.
All right, Kevin, I'll give you the last word in terms of the Federal Reserve September meeting. I mean, they are certainly out of tools. Should we be re-entering a global recession?
So one of the things investors really need to focus on right now is earnings season is over. So that unsystematic risk is gone. So now it's all systematic risk, going back to the Fed, going to China. So we think it's going to be really, really choppy going into the end of September till we can get actually earnings to come in and save us like they did last year. So we're not going to be able to see how this market's going to feel for the rest of the year until companies actually come out and give indications and guidance in how they perform this past quarter.
All right, guys, we'll leave it there. Nick Colas, Kevin Kelly, thanks very much for joining us.
Thank you.
Thank you.
I'm Scott Gamm, and you're watching The Street.